Is the market going to continue taking a glass half full view to the phase one development? So if, for example, all we get is a very bare bones phase one deal with no prospect of phase two and no rollback, will the market move higher?
I don't think so, would be my answer. I think the market's already pricing in the stabilization effect of a deal. I think once that's signed, I think then that people are going to be asking, well, actually, what's the impact of that on the real economy? Is that going to be enough to stabilize corporate confidence? Is that going to drive investment? Is that going to essentially drive that economic rebound that I think equities are pricing in into 2020? And I'm not necessarily sure that that's the case. And there'll be enough of a question mark about whether that's enough of a boost that I suspect you may well sort of see on the news people taking profits.
Yeah. I'm wondering then whether people are going to take profits in U.S. equities versus China, for example, because we've really seen the U.S. equity market outperforming China recently, and the correlation has been coming down between the two markets as well. I think we've reached almost record levels of sort of priciness of the U.S. market versus China. Is that a trend that's likely to reverse as people perhaps see the U.S. market as less defensive?
Well, I think the U.S. tends to be more resilient to global economic trends. It's got such a big reliance on domestic consumption that actually the key drivers of both the stock market and the economy tend to be more resilient to those global trends. And I think it'll be the economies, I think once we look at the things over a period of time, that are more susceptible to global trade that will suffer the most from uncertainty over those investment levels. And that's probably likely Europe and probably also China as well, I would say. And that's what we've seen when things have got sticky over the last sort of 18 months. It's typically been the European market, the cyclical componentry of that has suffered the most.
Will that also include Japan? Will that suffer more as well?
Well, I think Japan, again, is pretty susceptible to those kind of economic dynamics as well that we've seen there. Some of the Asian markets like Korea, and again, saw the data this morning that's soft. So, yes, I mean, I think those economies that are open, dependent on exports, dependent on manufacturing, or which make up a significant portion of their economic activity, are then going to, I think, there'll be more question marks around their performance looking through into 2020. And I think that's partly going to be driven because we have seen such a strong performance for equities, during 2019. I mean, the European markets are up over 20%, and if you go back to where we were back in January, when everyone was worrying about an awful lot of different factors, Brexit, trade, what Fed policy was going to be, to sit there and say actually we're going to see a sort of the best return for nearly a decade, I think people would have been pretty surprised about that.
Yeah.
And I think you've got to look at the context of trade negotiations set against what returns we've seen, which have been really good, and I think that then gives the allowance, and where multiples are higher, for stocks to potentially retrace, if we don't see something more substantial than just a framework agreement.